Will the US become a crypto superpower? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Jeff Dorman, the CIO of Arca. Hi, Jeff. Welcome to the show.
Hi, thanks for having me.
So, this is your first time, so it might be good to start with just a little bit of background. You're somebody who spent a good chunk of your career in traditional finance at firms like Merrill Lynch and Citadel, but now operate in the digital asset and blockchain space. So, you've got this sort of great view, I think, of both worlds. What do you make of this market volatility, and how is it impacting the crypto space right now?
I'm surprised people are surprised by this. It's almost as if people forgot that he was president once before, and we had the exact same market reactions from 2016 to 2020. Not only was he, one of the first few presidents to embrace social media, but just the off the cuff information flow that comes out of him relative to other presidents and politicians, where it's much more structured and planned. This is what we had in 2016 and 2020. It's just that most of the crypto people didn't care about politics or economic data points back then. So if you follow the equity and the debt markets, you're used to this. If you're in crypto, this is the first time that the full macro and political picture has had such a big impact on the crypto markets.
Yeah. And it seems a little bit like it's flowing back and forth because a lot of people have been pointing out that, say for those first couple of days, and when we're talking about the volatility, it's really been it's been volatile, but it's really been since the tariff announcement, so-called liberation day, that we've really seen this extreme level of it. And despite the fact that there was some selling and there was, some sort of, upset in the market. Certainly those first couple of days, everything was going down. A lot of people have been pointing out that Bitcoin has been holding up well during the volatility. And, granted, we have all assets rallying as we speak today. We've got, the stock market's recovering somewhat. But people have been noting, okay, wait, hang on a second. Do you think investor attitudes have changed when it comes to Bitcoin? What do you sense? Or should we not read that much into it?
Well, let's also pause for a second before we get into that and realize that that's a very U.S. centric view, talking about the volatility and the downward price action in markets. The European equity markets, a lot of Asian equity markets were up in the first quarter and year to date, and have done really well. Same with European credit. So, not to mention, like you said, gold and to some extent Bitcoin. So, this is very different than like a global wide panic or a global wide recession. The panic has really been very focused on U.S. companies, with which you can make an argument that digital assets should be incredibly resilient to this. Not just Bitcoin as a flight to quality, which I'll go into in a second, but also most digital assets, they have no physical properties. They have very few employees. They certainly aren't importing any goods. There's no real reason why most digital assets, even the ones that are more equity-like, that have real revenues and cash flows, there's no real reason why they would be affected by tariffs or affected by a recession. In many cases, they're more like quasi-equity loyalty reward cards than they are companies. So I'm not at all surprised that we're seeing a little bit of a divergence there. As it pertains to Bitcoin itself, that's always the hard one, right? Over the last 3 months, gold has severely outperformed Bitcoin, and a lot of people are obviously calling for a catch up for Bitcoin and why is it not reacting the same way as gold is. But if you zoom out and look at 1 year returns, Bitcoin and gold are up the exact same amount. So all that happened is that Bitcoin front ran some of this when it went up in November and December and then came back down, whereas gold lagged and then really went up in February and March. But we ended up in the same place, which is that you know Bitcoin is not a flight to quality in terms of protecting you against a market crash, but it is a flight to quality against lack of trust in banks and governments. And everything that's happening right now is just that, right? We are fearing what governments around the world are doing with these tariff wars. We are seeing some fear with regard to interlending between banks. That's why you see swap spreads blow out in February and in March. And when that happens, Bitcoin and gold will soar. And we've seen this many times before. We saw it in March 2023 during the US regional banking crisis. We saw it during the Canadian trucking standoff. We saw it during the Cyprus banking issues, I think in 2019. Anytime you start to lose faith in your local banks and governments, that's when Bitcoin gets a bid.
Yeah, that's a great distinction. And you're absolutely right. The reason I brought up US markets is because there was a time when it looked like Bitcoin was in lockstep with the NASDAQ. And that's what you would hear, right? That it is a risk asset like the NASDAQ. So if you applied that in the past, they did, and you charted it, they did look like they were moving in that. This time, yes, the rest of the world is going up. A lot of places totally outperforming the US. The NASDAQ really taking it on the chin, and yet you've seen Bitcoin be able to decouple. Does it feel like that's here to stay now, and people are more locked into what you just said, that sort of, asset as something that is a protection against a lack of
Well,
trust in government and banking?
I mean, I definitely think that's the underlying reason why Bitcoin will and has in the past spiked. But I think, you know, taking a step back, correlations tend to have more to do with the players than it does the assets themselves. Meaning, if all of a sudden we have all of these macro funds coming into crypto and trading Bitcoin for the first time because of the ETFs and because of the CME, then naturally it's going to start being more correlated to the other assets that they trade. In the same way that when Archegos Capital blew up 2 years ago, there wasn't a real reason for Viacom stock and Baidu and all these other assets that he owned to be correlated, except for the fact that he owned them all and was getting margin called at the same time. So I think taking a step back, though, the real answer is that the definition of an uncorrelated asset is there's no consistent relationships. And that's what Bitcoin has always had. I mean, I've been doing this now professionally for 8 years. And I've been talking about Bitcoin's correlation to gold, to the US dollar, to the Chinese yuan, to the
Mm.
NASDAQ, to you name it, to avocados. And it's nonsense, right? Correlations come and go because there is no statistical correlation. So we might latch onto whatever narrative you want for the short term, but longer term, this is the reason that most investors want to get into digital assets, is because it is completely uncorrelated on any longer time frame.
Yeah, I think that's first of all, a couple of excellent points you just made there. But that is really one to remember across a lot of things, that it's not the asset, it's who's in it. And hi everybody in the chat. Shaky Pudding is joining us, I think maybe for the first time, at least chatting, and responded, I think, in a similar vein. Crypto is still linked to the NASDAQ because the people who trade the Mag 7 also buy Bitcoin. So to your point, it's who's in the asset as opposed to maybe the properties of the asset itself. I think that's a really good thing to keep in mind. So some of the people listening, some own crypto in this community. I know they do. They talk about it in the chat all the time, and they may be heavily involved, or they may own it. Just some things. Others don't trust the space. You have said that there's a frustrating lack of education and a ton of misinformation out there still, even though you've been doing this for so long. I read your stuff on LinkedIn and I follow you, and I'm always interested to hear you say that. What do we need to understand about what's happening in this space? I mean, it's a gigantic question, I think, but what are some of the sort of misconceptions that you think that we should be aware of and sort of be focused on, and that need to be cleared up?
So I think the biggest misconception is that you can say crypto is X or Y. Like you can't say crypto is up or crypto is down, because crypto doesn't mean anything. Crypto is just a wrapper. In the same way that you would never say are ETFs up or down today, because the natural next question would be, well, what type of ETFs are you talking about? Are you talking about equity ETFs or bond ETFs? Are you talking about sector ETFs like healthcare or airlines? Are you talking about 3 times levered ETFs or actively managed ETFs? Like, the ETF itself is a vehicle, and you can put anything you want inside of that vehicle. And the first ETFs were basically S&P 500 ETFs, right? The spiders. So naturally, that made a lot of sense to people. If the first ETF was some triple levered micro strategy ETF, people might be like, well, I hate ETFs. I'm not touching them. ETFs make no sense. And then later people be like, well, no, that was just one example. There's lots of other types of ETFs. And it might take some time for you to get past that. But that's effectively what's happened in crypto. The first type of crypto asset was Bitcoin, some form of weird currency, commodity, whatever you want to call it. That's just one type of asset that you can fit inside of a crypto wrapper. Since then, you've had all kinds. You've had asset-backed tokens like stable coins. You have equity-like tokens like the Binance coin BNB, or a lot of the DeFi tokens like Hyperliquid. You've had debt-like tokens. You've had more reward-like tokens. You have all kinds of different permutations of tokens. Some are inflationary, some are amortizing. So the fact that 8 years after the Ethereum-led ICO boom, we're still having to tell people about this is crazy. I mean, like I was looking at a tweet a month ago from a pretty prominent macro investor who showed a screenshot of a bunch of digital assets down in the day, and he said, "I want to see worthless fake currencies crash to zero where they belong, where they belong." And, excuse me. And the list of assets that he had in there, he had Bitcoin, which, like I said, is a currency or some form of currency. He had Solana and ETH, which are smart contract platforms, right? These are more akin to, like the Apple App Store or some sort of technology platform. He had BNB, which is a profitable company, Binance, that has $100 billion equity market cap and $100 billion token market cap, with a token that shares profits of its business with its customers. It had a meme coin, Dogecoin. It had Aave, which is the world's largest on-chain digital bank with 33 billion in deposits, and a collection of other random tokens that had nothing to do with each other. And I'm just surprised that this is still how people think of this technology, that it is just sort of this, lumping it all together. I mean, even prominent crypto companies will say Bitcoin versus altcoins. And I'm
Yeah.
like, what are we doing? Why are we still calling that an altcoin? Does that mean that every asset that isn't Apple in the equity market is an alt equity? Like it makes no sense, and it's almost intentional at this point to perpetuate bad narratives that just don't make any sense anymore in this day and age, when it's so easy to do a little bit of research to figure out that these assets are very different.
Yeah. That makes a heck of a lot of sense, I think. And I like the ETF comparison because I think it's something that we can all wrap our head around. And I have been thinking about it that way when you talk to people and thinking about innovation. And I get the sense that we can't afford not to understand this, because it seems like there's a lot of movement and momentum. I know you're super bullish about things that are happening, and think that a lot of real world assets are coming onto the blockchain. And I hear that over and over again, which makes me think, wait a minute, like I might not just be thinking about stocks and bonds. Like I might have to understand this because I might need to make an investment decision
Yeah.
about this. What does that mean when you say that? And why do you think that's going to happen?
Well, first of all, you have to understand what a blockchain is, right? A blockchain is just a means for moving an asset, right? In the same way that the internet allows for free and boundaryless and global and instantaneous communication transfer, a blockchain does the same thing for asset transfer. Anything that can be owned on chain, owned as a digital asset, can be transferred via a blockchain for basically free, instantaneously, globally, and boundaryless. Once you understand that, then the natural next question should be, well, what are these assets that can be put on chain? And if you look at the list of assets that exist today, they're not very good, right? It's Bitcoin, which, I would say the probability of Bitcoin succeeding like it has was probably low, and it's a Harvard Business School case study how it became what it became. But outside of Bitcoin, you have all these different kind of random crypto native assets that most of the world doesn't understand and doesn't care about. Meanwhile, 99% of the assets that people do care about and invest in, stocks, bonds, real estate, hard assets, are not on chain yet. So if the purpose of a blockchain is to transmit assets, but the majority of the world's assets are not on chain, that's a pretty heavy mismatch.
Mm,
And I think most of what we've seen so far in the crypto world is really just experimentation to prove the concept. Like, we have now proved that blockchains work. We have now proved that smart contract platforms work. We
mm.
now prove that stablecoins work and that DeFi applications work. But the assets available on these rails are, for the most part, terrible. There's a few different ones here and there. Like I said, I mentioned BNB, I mentioned Hyperliquid. These are ones that we like and think are pretty interesting assets. Every once in a while, there's something unique and interesting, like a BitTensor. But the analogy would be, imagine if you walked into the outside of an airport for the first time, and it was like a science fair, and somebody was showing off airplanes and looking at all these amazing airplanes and doing loops and showing you what airplanes could do, and everyone's like, wow, that's amazing, that's going to be the future of transport. But the government was telling you that the only thing you could actually use on an airplane was, transporting teddy bears or something like that. What would the natural reaction be? The reaction would be a lot of speculative investing in airplanes, people being like, wow, I can see a future where there's going to be people traveling on airplanes, and UPS and FedEx are going to ship boxes, and all these great things that can happen on airplanes. All this investment dollar would come in. But then when you actually look at the usage of airplanes, it'd be pretty low because not that many people transport teddy bears. Like that's the same thing that's happening in crypto right now. You have all this investment dollars because people can see where we're headed, that all these assets are going to be on chain: stocks, bonds, real estate, the deed to your house, the equity in your car, maybe even new assets like Harvard coin one day and New York City coin and Disney coin, et cetera. But the fact of the matter is, the actual assets that the governments allow you to transact in, all these like non-security memes, weird things that the Gensler era forced us to create, are just not that interesting to most people. So I think we're kind of in that what I like to call is like the dot crypto phase, similar to the .com phase, where like the initial wave of the .coms were all internet native businesses that would not have existed if not for the internet. And then 10 years later, nobody's a .com because everybody is. All of a sudden, businesses that have been around for 100 years are using the internet in the same way that startups were, right? JP Morgan became an internet company. Domino's Pizza became an internet company. Walmart became an internet company. And if you called something a .com now, people would laugh you out of the room because they all use the internet. Like the first 10 years of crypto is this crypto phase where all of these businesses using tokens and using blockchain are these crypto native businesses that would not exist if not for crypto. And in 10 years, everyone's going to be using every asset is going to be on chain, and every asset is going to be used on blockchain rails. And we won't care about the current crop of assets that are available to trade.
Okay, that's mind blowing. So everyone's going to be a blockchain company. I mean, we just say this, everybody's a technology company, right? I mean, we say there's a tech sector, but every single company is a technology company.
Exactly.
So that's wild if that's going to happen. So two questions from that. And I have some questions in the chat too. I'm going to try to get they're good too. So I'm going to get to them, guys. You mentioned the government. So the government was telling you only teddy bears can be on that plane. Is the government now? We know that there's been big changes happening in DC. There's a lot of enthusiasm. Paul Atkins sworn in as the new head of the SEC this week, and that's just the tip of the iceberg. There's been what is considered, and tell me if I'm wrong, pro-crypto appointments throughout the Trump administration. Are we moving away from the teddy bears? Is it going to be like, let's get the humans on the plane? What else can we do? And the full backing of the U.S. government pursuing these blockchain opportunities now?
100%. I mean, that is where we're headed, right? I mean, the workflow right now makes no sense. Like, imagine if you were trading both stocks and crypto. This is a typical workflow for someone like us who runs a crypto hedge fund. Let's say we have some Bitcoin and we want to sell it. We sell Bitcoin into a stable coin like Tether. Then we take that Tether and we have to send it to like a Circle or somewhere to convert it into dollars. Then those dollars have to be sent to our bank account. And that bank account has to wire money to our brokerage account, which then has to wait T+1 for settlement to go buy a stock. And the exact same thing in reverse order when we're going the other way. Like, that's ridiculous. It makes no sense that we have to have these two separate rails to do this. And ultimately, what's being broken down and that's 100% being driven because of the Gensler SEC that basically said you're either a security or not, and if you're a security, we're going to fine you and throw you in jail. That's being broken down, and that's why you see Robinhood, seamlessly trading equities and crypto. That's why Schwab came out last week saying that within 12 months they're going to be trading digital assets. It's why Coinbase is applying for a bank charter so that they can trade stocks. Like, it's converging. I don't know who the winners are going to be, but pretty soon you're going to be trading all assets together in one place, and that's going to lead to the tokenization of stocks and bonds and real estate and other things that ultimately, once you have them all in one place, it just makes more sense to have the better settlement asset, which is blockchain.
I was going to ask who the winners are going to be. We'll circle back to that because I mean, of course, it's sort of hard to handicap that, but it's sort of the job you're at now. So I'm guessing that you've got some ideas about direction. But so this is a big change, and by the way, a sort of powerful geopolitical change too. If suddenly the U.S. is like going to step on the gas in terms of embracing this innovation, that has implications because I know there were concerns that would move elsewhere. But I just spoke to somebody this morning, a sort of long time market watcher, Rudy Havenstein. That's going to come out Friday, folks. Keep your eyes peeled. And he said something that I think sums up what a lot of people felt. And he said, I don't have anything against it. I'm not against it. I just didn't go all in and invest in it because I just couldn't believe that the government would allow it to happen, because basically it's a threat to national power, right? I mean, you just mentioned Tether. It's huge. It operates completely outside the jurisdiction of the U.S. Like, this idea that this would all happen kind of, and you said it earlier, it's kind of borderless, right? It's not sort of, people go to it because they distrust government. Does it seem like weird bedfellows for the US to be embracing it? Could this be something that hits a friction point further down the road again?
Well, again, when you say it, I assume you mean Bitcoin, and maybe to some extent you meant stablecoins. But again,
Yeah,
this is where you have to
maybe.
be careful about
Yeah.
what you're lumping together because, if I'm right and eventually Disney has a token one day, that's something that the US would want to embrace. I mean, what if Disney issued a token similar to what Binance did? And Disney has a token where 10% of top line revenues are used to give back to token holders, but you can also use the token to get discounts on Disney Plus subscriptions and Fast Pass at the parks and maybe ESPN Plus subscriptions, et cetera. Like there are other U.S. focused use cases of blockchain and crypto that have nothing to do with a currency like Bitcoin or a
Right.
dollar
So
based
it's
stablecoin.
a
So
more like the loyalty that, like a loyalty program that you talked about, or working that way. Yeah. So I,
yeah,
I, I meant it, I meant innovation, but thank you for that distinction, because yes, you're right. You could see where that would not be a hindrance at all. But there is this other element of payment, of instantaneous payment and kind of cross
mhm.
borderless payment that might get complicated, I guess. But how do you see that
Yeah,
playing out? Or is it just something that kind of has to work out as the innovation?
yeah. I think it's one of those things that there are probably some type of government officials who, if they could go back 10 years from now, probably would have gone back and tried to squash it before it became as big as it was. But the reality is, like, there's not a whole lot you can do to stop it at this point. So all you can do is embrace it and figure out how do you regulate it properly and how do you ensure that it leads to positive outcomes for
Mm,
your country or your constituents. I mean, at this point, even if the U.S. banned Bitcoin, all that's going to do is strengthen it in other countries and other regions, right? If they
exactly.
You're not going to be able to ban stable coins because half of the use case of stable coins is to get dollar exposure for countries that don't have it, right? So I don't think you could even shut down this train if you tried at this point. There probably was a point in the young history of blockchain where before it got off the ground, you might have been able to squash it. But
Mm,
at this point, it's too late. So I think governments have no choice, right? They have to figure out a way, like I said, to regulate and to embrace what is going to be inevitable anyway. And then, like I said, more importantly, guys like Bo Hines and David Sachs, like you said, who are inside Washington and are pro crypto, have to think of other ways to actually innovate and make this something that can create jobs and tax revenue and things like that. And there's a lot of different ways to do that.
yeah. So I think it's along these lines, someone asking, what role do you see stable coins playing in our financial system, and why has the government chosen to focus on them?
Well, the easiest thing to focus on because they're just money markets. I mean, that's all a money market is you put dollars in a pot and those dollars get invested in short duration assets like treasuries and highly rated commercial paper. The only difference is that money market is a fund that can't be spent and can't be used, right?
Mm,
What blockchain is really doing is it's blurring the lines between investment vehicle and payment vehicle. Like if I could put all of my money in a money market and spend that when I go to Starbucks or McDonald's, then you would never own a checking account, right? It would be pointless because you can spend your investment assets and you're earning more on your investment assets. Well, that's effectively all stable coins are doing is it's taking your spendable asset and your investment asset and merging it into one vehicle. So that's the easiest thing to regulate because it already exists. It just
mm,
exists under a different technology lens. So the ones that are harder to regulate are the ones that are like these quasi equity, quasi loyalty rewards cards that are kind of this new technology that don't fit under current regulations. So I think that's why the government is focused there first is it's easy and it makes a lot of sense. And also, at least in the U.S. from a U.S. centric standpoint, they don't want to lose the dollar as reserve status. And the best way to increase the dollar's power globally is to get dollars in more people's hands. I mean, that's why euro dollars exist, but euro dollars is a very small market, whereas this could be in the trillions of dollars if you have every country in every region around the world transacting in dollars versus via stablecoins.
yeah. Absolutely. I think the euro market maybe not as small as we think it is. It's part of the problem. So I'm not sure anybody knows, but that point has come up about this, as everyone's saying this is the end of the dollar as a reserve currency. If stable coins take off, some folks who straddle the worlds like you do are saying, well, actually, this if anything, sort of doubles down on that being
Mhm.
a reserve currency. So a huge vested interest in the US for going down that road. So I love this idea of the sort of .com era of crypto. Like we're in this weird transition phase. And with the caveat that you don't know who the winners are, what's needed, or what area is next? Because it feels like what moves it from this like crypto natives I into that sort of more mainstream world of traditional. I mean, I don't mean a killer app, but it seems like what's the bridge? It seems like there's
Yeah.
a bridge missing somewhere. Is that where the next big opportunity is?
Well, I think a big part of it is education. Like I said, I mean, the amount of people I talk to who still lump all of crypto together clearly shows that the bigger leaders in the space are not doing a good job of education, and we have to do more of that. But the next hurdles are probably workflow. Um, it's hard to change people's habits. I mean, you can point to any kind of change in technology, and it takes a long time for people to change their habits. I mean, I was just using this analogy the other day, but when we first went from like paper tickets at the airports to like kiosks and eventually just downloading it on your mobile device, like in the early days of that, like people would walk up to those kiosks and be like, I'm not putting my credit card in there, that's crazy. I mean, they're willing to go jump on a giant metal tube at 500 miles an hour, 30,000 feet in the air, but they won't put their credit card in the machine, and instead they go up to the ticket counter and try to get a paper ticket. So
I still see
it
people
take
with paper tickets. It's still happening, by the way, like
yeah,
less and
but
less, but
right, but now if you go to the ticket counter, what do? They walk around and they show you how to use the kiosk. So the point is, like, it takes, there is that kind of Malcolm Gladwell tipping point of where sometimes new technologies and new workflows just take some time to catch on. It's like the old Bill Gates quote that people tend to overestimate what can be done in a year and underestimate what can be done in 10 years.
Mhm.
So I think some of it is just time and embedding some of those workflows and some of those changes. Um, the other element of it, though, is a lot on the regulatory side. Like I said, I mean, you have to be able to trade bonds, stocks, real estate, crypto, all in one place. Like ultimately, that has to happen. It makes no sense to have these two worlds completely segregated. When again, crypto itself is just a wrapper that you can put anything inside of. So
Mhm.
once we start to recognize that, I mean, in a perfect world, you take your Tesla stock, you tokenize it, you send it to a DeFi protocol, and you use it as collateral to take out a loan. That's a much easier, frictionless process than anything that exists currently in the T+1, T+2, and banking and brokerage. So we're heading in that direction. And then once you do that, then it opens up all these other ideas like your local restaurant issuing a token to its customers so that the customers are quasi equity holders of the restaurant, or your New York City issuing a token where you no longer have to buy real estate to bet on the growth of a new city. You can just buy the token, and that token gives you a surplus, or gives you a dividend if there's a surplus, and you can use that token to get discounts on the subway or fast pass at LaGuardia, or wedding pictures at Central Park or something. You can go down the list. Harvard issues a token that you can redeem for tuition, and if you don't want to go there, then you trade it for Yale token or NYU token or whatever. Right? I mean, there's all kinds of different types of assets that we can then experiment with, but it's not going to happen until you have the majority of people on chain. And to get people on chain, you need these onboarding events. You need better assets on there, and you need the ability to interact between your stocks, your bonds, your real estate, your crypto, your DeFi protocol. So for us, you asked me like, how are we investing on this? Who are the winners going to be? It's pretty simple. You need some smart contract platforms. You don't need 100 of them, but you need some. And I don't know exactly which of the winners. Ethereum and Solana have a big lead right now, but the reality is if the U.S. government came out tomorrow and said, we're putting everything on the Avalanche blockchain, like Avalanche is going to be the winner. It doesn't really matter what Solana and Ethereum have done to date because they don't have big customers and big assets yet. So some smart contract platforms are going to be the winners. The DeFi protocols that exist on those platforms are going to be the winners. There's going to be a big intersection between AI and crypto because ultimately, anybody who uses ChatGPT or Grok or DeepSeek, like that these current versions of LLMs where they answer questions are great, but the future is going to be where they do it for you before you even ask the question because they know what you want and they're going to transact for you. Well, how are they going to transact? They're not going to have a bank account because an AI agent can't walk into a bank with no social security number and no tax ID and get a bank account. They're not going to have a brokerage account. They're going to have a wallet, and that's how they're going to transact. They're going to buy your groceries for you, and replace your printer ink and buy new light bulbs for you with digital assets. I mean, that's the only currency they're going to be able to use. So, I think that's the future of from investing today is you want to invest in the smart contract platforms that you believe are going to be winners. You want to invest in the DeFi platforms that are going to be vertically integrated that allow you to do everything from spot and derivatives trading to DeFi lending and borrowing. And you want to invest in various, gaming or AI or other applications that are going to kind of further power the usage of blockchain.
So it's some people are going to listen to this and think, my God, that's just so futuristic. You've been doing this, you're down that rabbit hole. But honestly, we didn't have credit cards like that long ago. And so I did this. I was telling Jeff, I did this Evolving Money podcast series that's out on Search Up Your Podcast. And they talked about the historical event that has similarities to things happening now on blockchain, and things we just take for granted. It's part of financial innovation that can happen quickly. It's just that once you're there, you can't remember a time without it. The question about, and I noticed you didn't call them cryptocurrencies, you should call them smart platforms. And I think that this is part of the confusion. We shorthand calling all these things currencies when you were talking about ETH and Solana. And I think this is one of the biggest issues for people too, is if I'm going to dip my toe in and be involved or start to nibble on things, how do I know what wins? And I reference, this shows my age, the sort of like beta VHS war. Like if I start to get involved in something, what if it's the wrong one? And what if it's not the marketplace that chooses it? What if it's a government that decides to say, okay, this is the one? And is it just one, or can there be many? I think that seems like it freezes out a lot of people, even from thinking about being entrepreneurial in this space.
Yeah, I mean, there's basically three ways to go about it, right? One is you hire a professional manager, which is what institutional investors do with funds like us, is they want us to manage it for them because we have, 24/7 research and teams of 10 to 20 people doing exactly what you just said. The other, for people who are not institutional investors or who are more internet savvy, get on chain. Don't just go on Coinbase and buy something. Go on, go find a way to take the asset you bought on Coinbase and put it in a different wallet and bridge it to another chain and go on a DeFi platform and figure out how to actually use this stuff. I mean, if I were 20 to 30 years old and I was interested even remotely in crypto, I would be on chain every day. There are so many opportunities to learn. The first person I hired when we started Arca, I read a blog of his. I thought he was some 35-year-old portfolio manager. I reached out to him. He was a senior in college who was just doing it on the side. And I hired him. He's been with me for 7 years. There's no experts in this space because it's brand new. You can become an expert in 3 months. So I would absolutely be playing around and learning on your own. If you're just trying to passively invest, that's where it gets really hard, because I could sit here right now and give you my top 5 ideas. And in about 3 months, I bet none of those, or maybe one of those 5 are still my best ideas, but I won't come back and tell you guys. So it's like, it's
so
really
you're
hard.
Constantly changing. That's how much is going on, that you're constantly changing your.
Yeah, I mean, I would say a long-term thesis right now is probably 12 to 24 months. The short-term thesis might be 12 to 24 hours. I mean, it's definitely fast and it's innovating, and there's going to be a lot of winners and losers along the way. But it's not as simple as just saying go invest in the S&P 500 and get exposure to everything. Like even the indexes that exist today are awful. They're outdated the second they're issued, because they're usually market cap weighted and they just have like Bitcoin and Ethereum and Solana and Ripple. And, there's a world where none of those 4 matter in 5 years. So it's definitely harder to kind of just blanket say, I want to be, quote unquote, long blockchain, and here's how I'm doing it. You really have to figure out, well, what does that mean? Do you want to be long the growth of stable coins? Do you want to be long the growth of DeFi, the growth of AI? Do you think that new companies are going to be experimenting with blockchain and you want to invest in public companies that are using it? Like, there's just a lot of different ways to do it. And it takes work. I mean, it's just not as easy as, kind of a set it and forget it investment.
Yeah, but well worth it. And that's a really interesting point about the public companies that might be on the forefront of this, because some are just paying more attention and investing more heavily in this, and will be leading the charge when, to take advantage, or be well positioned anyway to take advantage of some of these innovations. The last thing I want to ask you is about the risk. So this sounds like there is massive opportunity, and really fortunes to be made, but there is a lot of space between now and then. And, there's a lot of meme coins out there, altcoins, call them what you will, all sorts of investments. I inevitably get people asking me about XRP. Like all of a sudden, millions of people always asking about XRP. And I think there's some politics behind that, but which I didn't realize at first. And so like, what's the risk? What won't survive? So .com ended up with the internet, which changed everything. We talk about this in the AI space all the time. Some of the early, even if they're innovators and completely legit, but some of the early companies just don't make it, right? They run out of money. They get blown up if there are speculative bubbles that burst. It's a hard road for that sort of first innovative phase of something. What's the risk that we need to be aware of, or for people who are maybe dabbling in these sort of altcoins and stuff? Like, what do we need to think about in terms of failures and who doesn't come out alive?
Yeah. I mean, it's not too dissimilar to anything. I mean, 95% of restaurants fail. 95% of startups fail. 95% of crypto startups are going to fail too. So it doesn't necessarily mean that they did something wrong. It certainly doesn't mean that it's a fraud because it didn't work. It's really hard to build a business, and sometimes it works, sometimes it doesn't. So it's hard. I mean, there's going to be a high failure rate. When you think about risk reward in investing, what you're really asking yourself is, am I underwriting enough upside to offset whatever downside? So for instance, most people, if they were fully invested in crypto over the last 3 months, are probably down somewhere in the 50 to 60% range, if not more. Unless their entire portfolio was in Bitcoin and Ripple. But, that's okay if you're underwriting 3 to 500% upside, right? You're willing to take large drawdowns if you're also underwriting correctly on the upside of what these things are worth. Similarly, if you're going to invest in 10 things and you know that 7 of them are going to fail, okay, well, now you just know that 70% of your portfolio is going to zero. So the other 30%, better be up 600-700% or more to offset that. So that's really all you're saying to yourself, is you have to accept that there is going to be high downside volatility. There is going to be a high failure rate. And as a result, you just need to believe that the upside for the ones that you get right are more than enough to offset that. And it's, that's no different than the .coms we talked about, right? For all the .coms that failed, the ones that succeeded, made 10 to 100,000% returns.
But one of the things we also learned is that what is the problem they're solving for, right? We figured out that there was just some .coms that existed, and there wasn't really a business case. And I thought that was a lesson that came out of it. Is that one we should be applying here to be understanding? There must be some legitimate and then some speculative BS that we need to stay away from, So
well, I think the last 3 years changed crypto for the worst. And what I mean by that is this fear of the SEC basically telling you that you were, doing an unregistered security offering, and if that were the case, that we're going to put you in jail or fine you and all that, really pushed innovation the complete opposite direction, which is, okay, well, if legitimate projects are getting potentially sued and thrown in jail, then we're going to go the opposite way and just do meme coins and nonsense governance tokens and things that have no value. And that's not the right answer either. Obviously, the right answer is, for things to have value, they have to be valuable. And what makes something valuable? You have there's only 3 kinds of value. There's either financial value, which is revenues and cash flows and profits that get put back to the business in some way, either via reinvestment or via dividends or buybacks. A lot of crypto tokens have that, especially in the DeFi space. Hyperliquid, I mentioned earlier, is a good example. I mean, they're run rating $1 billion of revenue, and 90% of that revenue is used to buy back the token. I mean, that's as clear cut of an equity-like token as you can find. The second form of value is utility, meaning, is it useful, right? Can I spend it? Can I use it for collateral? Can I pay gas with it? Can I, do something with it, right? Airline miles are a utility. Starbucks rewards are utility. Ethereum and Sol, using the token to pay gas and for collateral, that's utility. The third type of value is social value, which is much harder to figure out what it's worth, but you can't deny that it's worth something. I mean, you mentioned Ripple. Ripple has no real business. Ripple is 100% just social value. But because they've created the most social value in history, and to the tune of $130 billion market cap token with a war chest of cash, they now have a lot of optionality on what they could potentially do with that cash to build a real business model. Bitcoin is 100% just social value, and then over time, it's now have a little bit of utility value because you can start using Bitcoin for things. Excuse me. Something like Solana, for example, has all 3. There's real financial value because there's real transaction revenue that goes through the Solana blockchain. Basically, Solana is like a country that takes tax revenue every time there's transactions happening on the blockchain. It has real utility because you can use it to pay gas and as collateral and to trade into other tokens on the net on the blockchain. And it has real social value. Like it's a community. It's cool to be part of the Solana ecosystem. So if you can find tokens that have 1, 2, or 3 of those value propositions, they're more likely to succeed than the ones that don't. So if all you're investing in is things that are just pure meme value and pure social value, and that social value never amounts to anything, you're not going to make money. If you're investing in things that have real revenues and cash flows, it might still go down, but that downside is going to be a lot less than the other ones. And I think that's sort of the re-underwriting that this industry has to do is, stop pretending that just because the Gensler-led SEC forced us away from value into this nonsense, that's the future, right? That's not the future of this. The future of this is crypto is a wrapper. You can put anything you want in that wrapper, and the things in there have to be valuable for you to want to buy them.
Yeah. Gosh, Jeff, just like a wealth of information in this conversation. I can't thank you enough for coming on, because I feel like, I just learned so much in this 30, 40 minutes. It's incredible. So thank you for that. And hopefully you'll come back again as we all try to sort of, game up and level up and understand what's coming at us, because it sounds exciting. So thank you so much.
Thank you for having me.
Thanks, everybody, for the great questions and comments. We will see you all again soon. In the meantime, take care and good luck out there. Thanks, Jeff.